Farmers in the state of Minnesota perhaps breathing a little bit easier tonight after China agreed to end its boycott of U.S. soybeans just this morning. Thanks for joining us on the show. I'm Janice Shortle. If you're not a farmer, it can be hard to appreciate how much this actually matters. So that's why Kent's here. He's going to explain it to us.
I'll try, Jana. Soybeans are easily Minnesota's biggest ag export, valued at nearly $2.5 billion on average. But this has not been an average year. China, which usually buys a quarter of our beans, suddenly stopped. Now they're promising to start again, and farmers are hoping that's true.
The soybean growing season on the McIntoon farm near Glencoe was a dream this year.
I mean, you can't ask for a better soybean harvest. Came and went just like that.
But Ryan McIntoon says deciding what to do with that harvest has been a nightmare.
It's just been kind of a wild ride.
The soybean price roller coaster went back up this morning, thanks to the announcement that China will finally resume buying Minnesota's biggest ag export.
It really eases my mind on having that certainty that that market will be available to us next year.
But look back a few years, and grain economists will point out that there's still a ways to go.
This stops the bleeding. The first thing for prices to go up, the first thing you need to do is stop going down.
But Ed Ussett with U of M Extension says the handshake deal with China is still a big deal for Minnesota. And to understand how big, he says, think of our soybean fields as football fields.
If China were the leading rusher in the league with 1,000 yards, the EU would be the second leading rusher with 120 yards. That's the gap, the chasm between the biggest and the second largest importer of soybeans, and it's good to have it back.
It's welcome news, and it's a good first step.
And Minnesota's ag commissioner says it comes at a time when Minnesota mediation claims filed by lenders when foreclosing on farmland and buildings or repossessing equipment are higher than they've been since the pandemic and the last Trump trade war with China in 2018 and 2019.
I'm most concerned about younger farmers that may not have the equity built up over the years to ride out storms like we're seeing right now for some farmers.
My grandpa built a lot of this behind me.
But despite that generational equity, Ryan says it's still been a bumpy year.
A lot of the products that we use here in the farm come from places like China, and other countries. So with the uncertainty of the tariffs, cost of production is here and selling off the field is here. We couldn't cover our cost of production.
But that balance is beginning to shift.
We were down here at 1026 a month ago, and now we're up at 1109.
That price difference for you means what?
Profitability. And that's the difference between losing money and making money and being able to farm next year.
And again, Ryan says he's in a better position than others, and the grain economists we spoke to agreed. He estimates that soybeans would need to hit closer to $12 a bushel to cover production costs for an average farmer in southern Minnesota. So, Jana, when we hear about these price fluctuations of even, a few cents, it matters a lot.
So, we saw a handshake with China. Do we think it's going to be just a one-time thing, or can farmers really breathe a sigh of relief?
Well, that's where the details matter.
Right.
They've said that this will last for 3 years, but Trump also said that every year they're going to renegotiate. And we know how this trade war has been pretty bumpy.
Yeah, it was interesting what that one of your experts said about the stomach of not having the equity built in. But I'm just wondering about just the stress of it. You don't want to get into it if you know every year is going to be something scary.
And there has been a lot of those big feelings and anxious nights.
Anxious nights for sure. Thanks so much, Kent. We appreciate it.